sometimes trying to keep up with all the new stuff in blockchain, it feels like being hit with a tidal wave of information. Just so many tokens, so many projects.
It really is overwhelming at times.
And then you stumble upon something like XEN,
right,
which does things a bit differently, especially, how you actually get at this whole idea of free minting.
It's certainly a departure from the norm, yeah. And what's particularly interesting, I think, is how XEN's fate is so directly tied to the health and activity of the blockchains it actually lives on. It's not some isolated thing. It's deeply connected to the dynamics of those networks.
Exactly. So for this deep dive, we've kind of sifted through a bunch of articles and even some thoughts from XEN's founder, Jack Levin. Our goal is really to cut through the confusion and get to the heart of what XEN is all about.
The core principles, how its economic engine works, and maybe what the potential could be down the line.
Yeah, we want to get a handle on it.
So if we zoom out a bit, you'll see we're going to touch on some really key aspects, like how easy is it to get involved?
Accessibility, yeah.
The power of network effects, why you see such different prices on different blockchains. That's a big one. The ins and outs of the minting process itself, liquidity, always important, and even XEN's, surprising impact on major networks like Ethereum.
Think of this as your express route, sort of, to understanding XEN and why it's been sparking so much conversation without getting totally lost in the technical weeds.
Let's do it.
Okay, let's jump right in. XEN's pitched as being super accessible. How true is that? And, how decentralized is it really?
Well, one of XEN's core claims is definitely offering a low barrier to entry into blockchain, that idea of free minting. It's specifically designed to attract a wide range of people, potentially including those in regions where maybe financial resources are more constrained. It's about opening up participation.
And it's not just sticking to one blockchain, is it? I mean, it's popped up everywhere.
No, not at all.
Ethereum, Binance Smart Chain, Avalanche, Polygon, Phantom, Pulse Chain, Evmos, ETH Moonbeam, Doge Chain, OKX Chain. That's casting a really wide net.
It is.
Doesn't spreading itself so thin risk kind of diluting the community, though?
That's a valid question, yeah. I mean, having a presence on multiple chains does broaden its reach, absolutely. You get different user bases, people drawn in by, say, lower transaction costs or specific community interests on different chains.
Okay.
But it also introduces complexities, right? Different chains have their own cultures, their own technical quirks. However, the multi-chain approach also offers a kind of resilience. If one chain faces issues, XEN still exists on others.
Oh, okay. That makes sense.
And interestingly, even though they have different tickers across these networks, the consistent XEN branding kind of helps maintain a sense of unity.
Right. The brand is the constant. Now, blockchain is supposed to be all about being censorship resistant. But I noticed XEN ran into some trouble there. On Doge Chain and OKX Chain.
Yeah, that happened.
How does that fit into the whole decentralization picture?
That's a really insightful point. Look, those specific instances of censorship, especially on maybe less established or less decentralized chains, they do highlight potential vulnerabilities.
Sure.
But XEN also lives on very robust and highly decentralized platforms like Ethereum. That multi-platform existence is actually a key strength.
So you have options.
Exactly. It provides users with alternatives and lessens the impact if censorship happens on any single point of access. It kind of underscores the idea that true decentralization is often about having a network of options, not just one perfect platform.
Okay, so the strategy seems to be broad access, leveraging different network strengths. Let's dig into the economics of XEN itself. Network effects keep coming up. How does that actually drive value for XEN?
Well, think of it like this. The more people who own and use XEN, the more useful and potentially more valuable it can become for everyone involved. That's Metcalfe's law in action, basically.
Right, like a phone network or social media.
Precisely. As the network of XEN holders grows, it can lead to increased liquidity, makes it easier to trade, and that increased activity can then attract even more users.
Creating a kind of positive feedback loop.
Exactly. Value and adoption can reinforce each other.
That makes sense. A bigger community could mean more utility, more demand. Now, about those price differences across the networks, they're pretty significant, like wildly different. What's the main driver there?
The primary factor, overwhelmingly, is the cost of using each network, specifically the gas fees.
Oh, okay.
On blockchains with lower gas fees, the cost to mint XEN is lower. This reduced production cost, if you will, can translate directly to a lower market price for XEN on those chains.
And the opposite for expensive chains.
And conversely, yeah. Higher gas fees increase the expense of minting, and that often leads to a higher XEN price on those networks. It's a pretty fundamental supply and demand thing, tied directly to the underlying network costs.
Right. I remember seeing that table. You could get billions of XEN for $1 on some chains versus like millions on Ethereum. It's stark.
It really highlights the difference in network fees.
Now, the minting process itself sounds unique with this logarithmic curve. Can you maybe explain that in a way that's easy to grasp?
Okay, imagine a mine where it gets progressively harder to extract gold the more gold has already been taken out.
Okay, yeah.
That's a bit like XEN minting. The more XEN that's already been minted globally, the longer it takes you to mint the same amount in the future. That's the logarithmic function working.
So it slows down over time.
Right, and when you add in the gas costs, especially on more expensive networks like Ethereum, minting for very short periods often just doesn't yield enough XEN to even cover the transaction fees.
So time and gas are both real costs you have to weigh up.
Absolutely. It's not just free.
So it's not just about getting something for nothing. There's this trade-off of time and the actual cost of the transaction. I also read about a connection between Ethereum gas prices and XEN prices. How does that play out?
Yeah, this is where it gets really interesting. There's a sort of self-regulating mechanism at play, potentially.
How so?
If Ethereum gas prices are high, right, it becomes more expensive to mint XEN. That can push the market price of XEN upwards because the cost to produce is higher.
Okay.
But the reverse can also happen. If the price of XEN itself suddenly shoots up for some reason, more people might rush to mint it.
Increasing demand for block space.
Exactly. Which increases activity on the Ethereum network and could potentially drive up gas fees.
Huh. So it's a feedback loop.
It could be, yeah. This dynamic might even contribute to some sort of price stability over the very long term, as arbitrageurs try to exploit any big differences between the minting cost and the market price.
That's a clever bit of economic engineering, potentially. Now, I saw a note about a time when XEN's price actually dipped below the cost of minting. That seems kind of paradoxical for a supposedly free token.
Right, and that highlights a really important distinction. It's the potential to mint for free versus the actual cost involved.
Gotcha.
Even though there's no upfront cost for the token itself, those gas fees are a tangible expense. And yes, there have been times where the market price of XEN on exchanges was lower than the amount of ETH needed in gas just to claim newly minted XEN.
So people just didn't claim it.
In those situations, it simply wasn't economically rational for some people to claim their tokens, which effectively took that potential supply off the market.
Wow. So the value isn't just intrinsic. It's really tied to the economic realities of the networks it's on. Free definitely has caveats.
Definitely.
Now, what happens once you've actually minted some XEN? What about being able to trade it easily, the liquidity aspect?
Well, what's notable here is how much the ease of trading varies across the different networks.
Right.
Ethereum generally offers the highest liquidity. That means lots of buyers and sellers, easier to execute trades quickly, get the price you want, even if the transaction fees themselves are higher. On other networks, maybe ones with lower adoption so far, you might find fewer trading pairs, less volume. That makes it potentially harder to buy or sell large amounts without, moving the price significantly against you.
So lower fees to get in on some chains might come with less flexibility when it comes to trading out. That's the trade-off.
That can be the trade-off, yes.
But the sources mentioned that XEN has some built-in mechanisms to deal with these lower liquidity situations.
Exactly. The ecosystem isn't necessarily a dead end if you're holding tokens on a less liquid chain. Users have the option to burn their XEN.
Burn it. What does that get you?
Well, burning XEN can yield other benefits, like DXN tokens, even ETH and XN rewards in some protocols. Users can also explore selling XEN on NFT marketplaces like OpenSea sometimes.
Ah, interesting angle.
Yeah, it offers a different avenue for trading maybe, especially on networks with less developed DXs. Plus, burning XEN can also grant access to participate in other projects within the wider XEN ecosystem like Zen.game or DBXE NFTs.
And it sounds like burning XEN also ties into the upcoming X1 chain somehow.
Yes, that's a key point. Every time you burn XEN, you also receive a proportional share of the XN token allocation on the future X1 chain.
So it's another way to get XN besides just buying it.
Right. Instead of relying solely on decentralized exchanges later on, burning XEN provides an alternative route while also potentially reducing the circulating supply of XEN itself.
Which could help the price.
Could have a positive impact on its price, yeah.
That's a pretty clever way to create utility beyond just holding and trading. Now, shifting gears a bit, The amount of ETH burned due to XEN activity is just staggering. Tens of millions of dollars worth.
It's huge.
How did a free token cause so much ETH to, well, disappear?
Well, if we look at how Ethereum works now, post EIP 1559, every single transaction consumes gas paid in ETH. And a portion of that gas fee gets permanently burned, removed from supply forever.
Okay.
The sheer volume of transactions generated by users minting and interacting with the XEN smart contract since it launched, it just added up massively. Tens of thousands of ETH burned cumulatively.
And I even saw that this activity actually contributed to Ethereum becoming deflationary for a while. That's a huge impact from a token anyone can mint.
It's a truly remarkable outcome, yeah. I mean, XEN often ranks among the top gas consumers on many of the blockchains it's on.
Right.
But that deflationary effect on the underlying network's own currency, it's most pronounced on Ethereum because of its specific burn mechanism. It really highlights the unexpected ways a new project can influence the whole crypto landscape.
Definitely unexpected. Okay, so XEN has this unique economic engine, this surprising influence on Ethereum. Let's talk about the mind behind it all. Jack Levin and the Fair Crypto Foundation. What's his background and what was the real driving force behind creating XEN?
Well, what's compelling is Levin's background. He's got extensive experience in the tech world, early Google team member,
Okay.
founder of ImageShack and Venify, even got involved in Bitcoin mining way back. His motivation for creating XEN through the Fair Crypto Foundation seems to come from a really deep-seated belief in the fundamental principles behind sound money and decentralized tech.
Fundamental principles, like what exactly?
For Levin, these core tenets seem to be things like individuals having full control over their own assets, self-custody, right? Trust being established through transparent, auditable consensus on a decentralized network, resistance to censorship, minimizing counterparty risk, not having to trust intermediaries.
The classic crypto ideals.
Exactly. He views blockchain as the ideal technology to embody these principles and XEN as a way to practically demonstrate them and maybe educate people about them too.
And the Fair Crypto Foundation seems really central to his vision, especially regarding how XEN launched. What does he mean by a fair launch? Because you hear that term a lot. But
yeah, the execution varies wildly, doesn't it?
Right.
Levin draws a very clear line between a fair launch and the more common approaches like pre-mining or pre-sales.
Where insiders get a load of tokens first.
Exactly. In those models, a big chunk of the supply is created and handed out to insiders before the public even gets a sniff. With XEN, the core principle was that no one, including Levin himself, the development team, nobody started with any pre-minted tokens.
Zero initial allocation.
Zero. Everyone had to participate in the minting process from the start, which inherently requires effort, paying gas fees, committing time. So the core insight, the thing he stresses, is that by having no one start with an advantage, XEN aims to build trust from the ground up in a way most projects just don't.
Inherent fairness, not early access for a select few.
That's the idea.
So while someone with deeper pockets could technically mint more, maybe by running multiple wallets and paying more gas,
Sure, that's possible.
there was no initial distribution advantage, no massive pile of tokens held by insiders from day one.
Precisely. The opportunity to acquire XEN was, in theory, equally available to everyone from the very beginning. And Levin's long-term ambition for XEN is pretty significant.
What is it?
He envisions it becoming a leading peer-to-peer digital currency, mainly because of this low barrier to entry and the foundational trust established by its, equitable distribution. He believes that knowing no one had an unfair head start inherently makes XEN more valuable than many other cryptos.
That's a powerful idea. He also emphasized immutable code and the absence of admin keys. Why are those technical details so important for building that trust?
What's fundamental there is that no admin keys means that once the XEN smart contract was deployed onto the blockchain, even the original developers lost the ability to just unilaterally change its rules or functions.
They can't just rug pull or change the rules later.
Right. And immutable code reinforces that the contract itself cannot be changed after launch. This is absolutely crucial for transparency and long-term trust. It assures users that the basic rules governing XEN are fixed. They can't be arbitrarily modified or manipulated down the line.
So trust is in the code, not the people.
Essentially, yes. It's about creating a system where trust is embedded in the code itself, not reliant on any central authority.
And the decision to launch XEN across so many different blockchains, BSC, Polygon, planning for Pulse Chain, plus Ethereum, what was the strategic thinking there? Just reach.
The main rationale seems to be reaching a diverse range of users, people with different preferences, different economic realities. Different blockchains have different fee structures, right? They attract distinct communities.
Yeah.
So by adopting this kind of blockchain agnostic approach, the core XEN concept can be more inclusive. It can reach individuals who might be priced out of participating on, say, Ethereum because the gas fees are just too high for them.
So it's about maximizing accessibility, not just in theory, but in practice, catering to different environments.
Exactly. Meeting users where they already are on the ecosystems they're comfortable with.
Okay, that makes sense. Now let's touch on the initial hyperinflationary nature of XEN. Levin argues it actually had value from day one. How did he justify that, given the huge initial supply?
It's an interesting perspective. Levin's view is that value isn't solely about initial scarcity. He contends that the very act of minting XEN inherently gives it value because it requires a user to expend resources.
Time and gas fees.
Their time and the gas fees they pay to the network. He sees that initial step of creation by a user as a significant event, establishing a foundational value proposition, even with a large initial supply. It's the cost of production, however minimal it might seem, that provides that initial anchor for value.
That's an interesting way to frame it, value through the cost of creation, even if it's small. What about the price discrepancies we see across different chains? He didn't expect them to just equalize, did he?
Correct. He anticipates that achieving perfect price parity across all the blockchains XEN lives on is pretty unlikely, at least in the short to medium term.
Why not?
Mainly because of the differing economic conditions on each network. Like we said, lower gas fees on a chain like Polygon might lead to more minting, potentially keeping the price lower compared to Ethereum, where minting is more expensive.
Makes sense.
However, he does suggest that in the very long run, maybe as the rate of new XEN minting slows right down, some form of price equilibrium might eventually emerge, as the tokens become more easily transferable and interchangeable across chains. But that seems a way off.
Okay, let's get down to brass tacks for a moment. For someone thinking about minting XEN on Ethereum right now, what are the typical gas costs we're talking about, roughly?
Based on the founder's estimates around launch time, claiming your crank, which is basically registering your intent to mint on Ethereum, typically costs around 175,000 gas units.
Okay.
Then the actual minting transaction, where you finally receive your XEN after your chosen term, usually costs somewhere in the neighborhood of 90,000 gas units.
Right, but the dollar cost depends hugely on gas price and ETH price at the time.
Hugely. Absolutely crucial to remember that. The actual dollar cost will fluctuate constantly based on the current price of ETH and whatever the network gas prices are doing at that moment.
Got it. What about the optimal strategy for minting? With that amplifier decreasing over time and the minting term limits changing, it sounds like timing and choices really matter for maximizing rewards.
Yeah, there are definitely factors to consider. Levin generally advised that opting for the longest available minting term will yield the highest amount of XEN. Initially, that was capped at 100 days.
And staking.
He also suggested staking your newly minted XEN pretty promptly to potentially earn yield. The initial APY was around 20%, but it's designed to gradually decrease over about 4 years, down to maybe 2%.
Is there a penalty for unstaking early?
Importantly, at the time, there were no penalties for unstaking early, so staking offered potential upside with pretty limited downside risk.
Okay. He also mentioned this amplifier that starts high and decreases daily, so early adopters definitely got a boost there.
For sure. That amplifier starting high gave a significant advantage to those who got in right at the beginning.
And then there's this 5,000 wallet milestone that affects the maximum minting term, right?
Precisely. Once the total number of unique wallets that have ever minted XEN, the global rank, hit 5,000, the maximum allowable minting term jumped up significantly, approaching almost 300 days.
So that creates a strategic choice.
It does. Do you mint early with the shorter term but grab that higher amplifier? Or do you wait for the longer term limit, potentially getting more XEN overall, but accepting a lower amplifier?
Tricky. What did the founder think would happen?
He anticipated that the 5,000 wallet threshold would likely be reached pretty quickly after the initial launch.
And I saw something about vanity tweets for early minters. That's kind of a unique touch.
Yeah, it was just a little feature, a way for early participants to easily share their initial global rank on Twitter. Added a social element, maybe a bit of bragging rights for being an early adopter.
Fun. Now, for anyone listening who might be interested in getting involved now, what's the latest on official launch plans for maybe new developments or chains? Is anything imminent?
Well, according to the information we have, the initial launch of XEN on those various chains already happened. The founders' communication plan back then involved announcing a countdown once the audit was finalized.
Right.
For any future developments or new chain integrations, the best bet is always to follow the official XEN network channels and announcements from the Fair Crypto Foundation directly. That's where the real-time info would be.
Okay, good to know for anyone looking for the latest updates.
Yeah.
Now, XEN seems to have some interesting game theory aspects built into it. It's not just a simple min and hold situation, is it?
No, that's a crucial understanding. Maximizing your rewards in the XEN ecosystem isn't straightforward. It involves considering several interconnected factors.
Like what?
The timing of your entry, definitely. The duration you choose to stake your XEN if you stake, the prevailing APY at the time, and the minting difficulty itself adjusts dynamically as more people join.
Meaning later entrants have it harder.
Potentially, yeah. Later entrants might need to commit to longer minting terms to achieve rewards comparable to what earlier adopters got more quickly. The core minting formula itself has variables like the amplifier, the term length, the difference between the global rank and your rank, and that early adoption amplification bonus. It's complex.
So there's this dynamic sweet spot. You want to be early for the higher rewards, but you also have to factor in potential dilution as more people keep minting after you. Sounds like a bit of a strategic balancing act.
Exactly. Early participants benefit from the higher amplifier and the EAA bonus, but the ongoing minting by new users can gradually dilute their share of the total XEN supply over time.
So longer mints become more attractive later on.
It can incentivize participants to choose longer minting durations later on, to try and maintain a more significant portion of the overall distribution. It's definitely an evolving environment where the best strategy isn't static. It depends on what the rest of the community is doing.
Fascinating. Now, the question everyone always wants answered. What do the crystal balls say about XEN's price potential? What are the sources indicating? Any wild predictions?
Well, it's absolutely essential to treat any price predictions with a huge grain of salt, especially in crypto.
Of course, yeah. Standard disclaimer.
Right. As of the time of our info, the price of XEN was incredibly low, around $6.79, 10 to the minus 8 USD, way below its historical peak.
Okay.
Short-term technical analysis back then suggested a pretty bearish outlook, but longer-term projections from sources like CoinLore painted a more optimistic picture. Potential maximum prices around 0.0000039 times for 2025. They're at 0.000000399 for 2030. Maybe even as high as 0.0127 by 2040.
Wow, those are substantial potential gains from where it was.
They represent massive percentage increases, yes. But they are absolutely not guaranteed. Comes with considerable uncertainty and risk.
And that prediction source did note a high probability of a bull market for XEN kicking off in 2025, despite the bearish signals at the time. But the low trading volume definitely increases the risk of wild price swings, right?
Absolutely.
Lower liquidity inherently means greater price volatility. Even relatively small buy or sell orders can smack the price around much more than they would for a big liquid asset.
So buckle up if you get involved.
Definitely. While the long-term predictions might seem enticing, you have to be prepared for potentially significant price fluctuations along the way. High risk.
Got it. Finally, what about the community that sprung up around XEN? Is there much active discussion or development happening there? Is it lively?
Yeah, there's definitely a noticeable and pretty active community that has formed, mostly centered around platforms like Telegram groups like XEN Crypto Talk, and on Reddit, in the XEN Crypto subreddit.
What are they talking about?
Users are actively discussing minting strategies, sharing insights, asking questions. We've even seen international subgroups forming, which suggests a pretty global interest and engagement with the project. Okay, so to kind of bring it all together, XEN is definitely a unique experiment in the crypto space. There's strong emphasis on accessibility, fair distribution through free minting. It's different.
Yeah, and what you should really take away from this deep dive, I think, are those key connections we explored. The tangible impact of network gas fees on XEN's price across different chains, that's huge.
Right.
The potential advantages of being an early participant for maximizing rewards. And that long-term aspiration, the vision for XEN to function as a widely adopted peer-to-peer digital currency.
But as we always have to emphasize with anything in crypto,
always,
it's absolutely crucial to remember the inherent risks. The potential for significant price volatility is very real here.
Indeed. We'd strongly encourage listeners to delve further into the resources, maybe check out the official site, engage directly with the XEN community if you're interested, form your own well-informed opinions.
Where can people find that stuff?
The official D app is at xen.network, and those Telegram and Reddit communities are good places for ongoing conversations and different perspectives.
Great. And on that note, here's maybe a final thought for you to consider. Given XEN's commitment to this fair launch model and its community-driven growth, what might this suggest about the future? About how crypto projects evolve, how value is created and recognized in these decentralized ecosystems?
It certainly challenges some of the conventional wisdom in the space, doesn't it? Something to mull over.